Good afternoon, Kunj. The story this week, a lot of it has been about the primary markets, right? Look what happened with the Nika this week, Falguni Nair, the way the stock has performed, the pop that you saw as far as the IPO goes. And next week, you've got Policy Bazaar on Monday. Expectation is PayTM is going to be listing on Thursday. I want to first begin the conversation with you as far as all of this goes. You've got Nika now, which is more expensive than companies like Britannia, BPCL, one third of ITC.
Yeah, quite a few things for me to talk here, and along with these names, we should also remember the today's listing of I think it was a Fino Payment Bank, which at least in the morning was trading at a 10% lower than the offer price. I have not followed it up after that, so there are disappointment as well. PayTM, as we know, one of the reasonably biggest issues of the recent past, 18,000 crore, has barely managed to sail through. So let's see what happens on listing. Anyway, so coming to two other points. One, what is surprising is that especially in the issues which start trading at a price lower than the offer price or lower than the recent highs, the follow-up institutional buying doesn't come in. And what I mean to say here is that based on whatever one hears, in the case of anchor book, almost all the issues have huge demand over subscription and they don't get fully satisfied. But once the issue lists, and especially if it lists a discount, the same institutions who are willing to bid extra in the anchor book that surprisingly do not come to buy. So I don't know why. Maybe they were looking for a listing pop in the anchor, and since that hasn't come in, they just let it go, which is quite okay. Ultimately, they have to give return to their unit holders, their investors. So that's one part. Second point is that if we look at the valuation of these stocks from the traditional historical benchmarks, methods or valuation factors, there is no way we are going to be able to justify them. And so one should not try also. At the same time, does it mean, especially for retail investors, should they let go of such issues while subscribing to the IPOs or even post listing? My view is no. And why I'll tell you that is that till some time back, the Indian regulator, specifically SEBI, didn't used to permit loss-making companies to come in for IPOs. There was a criteria of 3 years profit or dividend track record or things like that. In such a scenario, some of the Indian platform companies went and listed abroad and gave good returns to the investors of those markets. So the demand arose that these are Indian companies, they are making money or at least making top line growth, if not profitability, based on the Indian demand. Why should the foreign investors benefit out of their listing? They should be allowed to list in India, and we know our risks. So the regulator allowed it. Now, once that is allowed, I think investors should participate in that. The only thing is that within the equity risk, once somebody comes into the equity, he knows he's coming into a risky asset class. He has to further identify his risk limit in terms of percentage of exposure, and only that part he should take exposure to such new issues, new IPOs or new listings. But as I said, in my view, they shouldn't miss out on the valuation and things like that criteria. One will never be able to justify on that criteria. If at all, one has to look at the newer criteria. Last point, we all know that at some point of time, market will correct, valuations will correct, and so will these issues also correct. But before that, can they give you 30-40% return or maybe more? Looks like yes. So why should you miss? As I said, just identify your risk profile and invest in them.
Okay, making it sound a little simple there, Kunj Bansal. Taking stock of what else has been happening in the market, Interglobe Aviation, that's the one flying high, no pun intended here. 7.25% is the kind of breakout that you're seeing. LTI is looking very strong. In fact, both LTI, LTTS for the last 2 consecutive trading sessions have given you very good returns. Another 4.5% bump up coming in for LT Infotech in today's trading session. In fact, the entire technology pack is abuzz. After TechM's numbers, 4% uptick coming in there. You've got Wipro, Infosys, TCS, all of them holding on to very, very smart gains. And Kunj, after a bit of consolidation, IT clearly is, back with its mojo. Fresh opportunities here, you think, to add positions perhaps?
So what I feel is that due to the recent run-up in the whole sector, both large caps and mid caps, I'm not sure if the similar kind of momentum will continue in the short term. But irrespective of that, the way the growth rate has been coming in the industry, the way the commentary from managements across the companies has been in terms of the demand and in terms of top line growth, that will be there. In terms of the cost pressures, especially the hiring, the employee cost, which they think they'll be able to pass on because of the high demand. As a result, we'll be able to maintain margins, unlike let's say the companies which are based on commodity prices and are seeing much more inflation and are not able to pass on the hike in the same proportion. IT industry will be able to pass on. So as a result, I think over a medium term, this sector will continue to remain an outperformer. As I said, due to recent sharp run up, whether it will remain an outperformer in the short term or not is difficult for me to say. But the overall view remains positive given the way, as I said, the growth is likely to come up.
Fair point. Okay, taking stock of some of the other buzzers in trade, ICICI Pru has shot up quite a fair bit. You're seeing a good 5% uptick on this particular stock price. I also want to check in on what the MSCI inclusion list names are looking. While the MSCI index rejig is going to take into effect only on December 1st, that's next month, the adjustments are going to be made on November 30th. And according to an Edelweiss note, the additions are likely to bring about inflows into the inclusions. So Godrej Properties an estimated about $185 million, IRCTC $174 million, Mindtree $205 million or so, Emphasis, SRF, anywhere upwards of about $200 million there, Tata Power $249 million, and Zomato as well, which is likely to see an addition of $160 million. The deletions then, Ipca Laboratories and REC, Edelweiss believes they are likely to see outflows of $114 to $98 million respectively on these names. Kunj, does the real estate story continue to hold through, and you think in declines such as we got in the last two trading sessions, these are good opportunities to buy in case someone has completely missed out on the realty move so far?
Yes, I do. I do think that the real estate as a space is likely to continue to outperform. In fact, if we look at the slightly longer term, and here I'm specifically talking of the price performance of the sector and the stocks, and by longer term, let's say about 6-7 years or so, we have hardly seen an outperformance in last 8-9 months, at best maybe a year. I don't think it's a year also, it's about 9-10 months. So that doesn't conclude just now. The way the demand has been coming up, again going by the secondary market checks, going by the management commentaries, going by the visible signs, and the supporting environment, the housing interest rates at their lowest in the range of 6.5 to 6.7, and all the financial lending institutions, banks, as well as housing finance companies falling over each other to lend for the housing finance companies. In this scenario, wherein microfinance and unsecured loans have resulted into asset quality issues, housing finance is an area which is almost 99% safe. So that is available. State governments have been supporting. There is a pent up demand, and we have seen how the way the salaries in the IT industry, which will extend to other sectors also, is obviously going to result into the demand. So despite, I mean, corrections, yes, of course, that makes it good opportunity. But even if there are no corrections, I think the sector is continuing to going to give return, and without waiting for corrections, also at least one should start taking part exposure in real estate.